Ultimate Trader here, August 6, 2022. I'm going to hit you guys off with 3 videos. This first video is going to be extremely controversial. It should actually be towards a lot of the different CEOs of companies that are losing money or companies that aren't doing so well that should take advantage of retail. I actually want to come out with this video last weekend, but what happened is last weekend I actually made an offer on 2 more properties in Connecticut. So I'm not actually in contract, so we're going forward with that. So I wasn't able to last week, but that was perfect because what just happened on Thursday with AMC CEO Adam Aron is a perfect example of what a CEO must do if the company is in ruins or really bad shape. I'm saying that because the last few weeks, since the middle of June, stocks have rallied to 3-month highs on bad news. Now, in video 2, I'm going to go over the state of the market. Video 3, I'm going to talk about my trading strategy. So my trading strategy is changing a little bit because what happens is we keep going higher on bad news. Now, I don't want to trade into that, but that's video 3. So what happened on Thursday? And let me go over this very shortly. I have other videos about it so that you know. When the stock market was created is for companies to raise cash from people. Because if you want to get loans from a bank or you want to get loans from anybody, the interest rate that you're going to get is very high. So the stock market was created so that everyone could get a little piece of a company, in return get some share in some of the profits. Many of these new companies aren't profitable, but just remember, when stock is private, there's no way for the company to raise cash. So when Robinhood had the situation with GameStop, AMC, they were getting margin call and they had no access to cash. That's why they had to limit trading. They didn't IPO yet. So when they IPO, there's a stock market so they can get cash. They can go to the market, see a market price, and sell into the market and get cash back. Now, that is very, very important because most of the people, I don't want to call them apes. I'm calling them apes because that's what they call themselves. So the people that have come post-pandemic call themselves apes, and I don't mind calling them that because either I call them apes, which is what they call themselves, or I say the post-pandemic trader and the pre-pandemic trader, because there's a huge difference. The post-pandemic trader doesn't care about financials, doesn't care about fundamentals, just wants to trade hot stocks, wants to take risks. They actually don't want to make 10%. If you tell them how you can make 10% in a month, or 6 months, or a year, they don't want that. They want to know how they can double their money in a week, make 50% in a day. But the point of that is, I'm telling you why the stock market is created, because if the company is not doing well, has a lot of loans, losing money, has negative cash flow, that's the most important thing. Because I read a lot of FUD about GameStop having close to $1 billion or AMC having $1 billion. Well, they have $1 billion, but they have negative cash flow. So if you have negative cash flow, is much more important than what you have in cash, because what you have in cash right now is going to fund the business. So AMC has $5.5 billion in debt. $1 billion. So when they say $1 billion in cash, what is that good for? If all the money coming in is going to the debt, it means if you're losing money each quarter, you're having negative cash flow, that $1 billion is going to go down. And before you can pay off that $5.5 billion in debt, you have to start making money. Otherwise, if you're doing like AMC did, which was lose $122 million, all they're doing is paying the interest on the bonds. They don't actually have enough money to pay the bond. And I'm going to get into that with REV, because a lot of you traders don't know the law. You don't understand that if a company goes into bankruptcy, I might as well go into that right now. Because a lot of the meme traders, they want to do the short squeeze. So they're trying to attack, just like yesterday, Friday, Beyond was on fire. Carvana was on fire. Bed Bath & Beyond on fire. Why? These companies are crappy companies losing tons of money. Bed Bath & Beyond have over $1.1 billion, and now has under $100 million in a year. So they have a lot of negative cash flow. So obviously these are shorted. All these companies are shorted because they're doing badly. You do not want to jump in a company just because it's heavy short, and because you're relying on other people to bid up. So your plan each day is the hopium strategy. So you hope that another ape is going to bid up your company. If not, you're going to take a heavy hit. And that's why, like on video 3, I'm gonna go through that. I would only want to throw these grenades in a bull market. Yes, we've had a bull market for the last 6-8 weeks coming off of 10,500, but the data doesn't support that, and I'm going to go through that in video 2. But we're talking about financials here. So when you have a lot of debt, like Revlon had $3 billion in debt, somehow they convinced the judge to get a loan of $300 million. You go into bankruptcy. You go into bankruptcy to protect you because you cannot pay the old loans. Now, I didn't look into all the details. It could be that the people that they owe $3 billion to are the lenders of the new $300 million. And they have some kind of agreement that if the stock goes, you're going to convert or something like that, because that's what happened with AMC. But I'm not even going to go into that with AMC. But there could be some reason that they got a loan of $300 million and they just got approved to get like $1.4 billion. Now remember, like the law says, that's what I'm telling you. You announce bankruptcy because you cannot pay the loans, the money that you owe. So you go into bankruptcy to avoid paying those people. So does it make sense, if that's the law, that all of a sudden you can get a new loan from someone else? That's like me having 5 mortgages. I have more than 10. So that's like me and not paying the 10 mortgages and going to get another mortgage with another bank. Okay, that's not legal. So I didn't look into it. I don't know who's doing the loan. I didn't read all the parameters of these new loans. I don't care to. I don't own Rev. Rev has been a meme stock. It went down to $1 and up to $10 within 5 days because it was heavily shorted. Okay, it was heavily shorted, and they announced bankruptcy. So whoever shorted was right. You know, it's unfortunate that a lot of the army, the retail ape army, they attacked the people that were correct in shorting these companies, and they might lose money because they couldn't fend off a whole bunch of retail. And, you know, we're going to see what happens with BBIG. It was a hot stock last summer. I was trading it a ton, but it's been halted for days, and chances are it's pending a bankruptcy. They're losing a lot of money. I'm not saying that's certain, but in the stock market, we're working on probability. Now, the reason why I'm saying the thing with cash flow and I'm saying the thing with debt, this video, like I said, when a company is not doing well and the stock is doing well, or in this case, Adam Aaron. Now this is what I would like to do, because it doesn't seem like I'm going to get a $500,000 deal to work for a trading firm. That's what I would like. Or don't pay me anything, but if I deliver, give me $500,000. How about I consult a company for $20,000 a week, like GameStop? GameStop CEO Ryan Cohen does not know the stock market, does not know how stocks work. Why? Because he still owns shares of GameStop. He did not sell any GameStop. The stock has been high and he didn't sell into them even though he got authorization. So obviously he doesn't know the stock market. Obviously. Adam Aron. Now you might want to say he's a snake, or people are saying that he's a puppet master or he's a genius. I will say he's a genius. He knows how the stock market works. He's playing the apes like a flute, and I don't blame him, because that is what a CEO needs to do. First, AMC was not doing well. It memed. He sold a ton into them and got them excited to get more shares, even though they're being diluted. How is that even possible? And that's why with this video, a lot of companies don't even know they could do that, because I'm still trying to understand retail. I'm trying to understand how Carvana was in the 30s, like low 30s, and went up near $50 yesterday, August 5th, and horrible earnings. Horrible earnings. All they're doing is losing money, and they used to make money and go over 100%. And the stock went up almost like 45-50% yesterday on horrible earnings. Same thing with AMC. So with the stock market, Adam Aron is a genius. Because remember, like I said, when you IPO, and I did a video last year, I think a little bit before this time, I think last June, and I said the number one goal of a CEO is to raise stock price so that he himself can sell, and all his friends, all his initial shareholders, all the big money that has shares can sell. You little guys, us, me too, I'm retail too, we sell the little shares while they dump loads. When everyone big gets out and you got out, you did your job. So Adam Aron sold 90% of his stock and trying to tell you that it was a retirement strategy. People, he's made over $200 million being the CEO of AMC. What retirement strategy does he need? He's already rich. He's dumping into you guys. He sold like 30, 35. He doesn't have shares. He has like 5% shares left and vested options that he gets for free. So he did not put in his own money. All the insiders AMC sold. Now, a lot of people don't know, but before AMC memed in 2021, the apes did not own the float. 40% of AMC was owned by a Chinese company called Wanda. You can look it up. It's not FUD. 20% of AMC was owned by Silver Lake. So when it first memed, they dumped. Now, they didn't dump as high as possible. I think Silver Lake sold between 15 and 20, and Wanda sold around 25, 30. But they're out. So if you sold, if your friend sold, all your major shareholders, the guy that you really talked to, got out, exit strategy, the stock was high, you got out, you did your job. The next thing you want to do is make sure the company stays in business. So, Adam Aron kept dumping shares at AMC. Well, he already dumped his stake. I'm talking about the company. So when the stock is high, like Carvana went through the roof, Beyond went through the roof, and they're losing money, and you see that the stock is going up, pay me money. Pay me 20. The idea of the APE dividend is $1 million idea. I could not have come up with that idea because I didn't think that the apes would like it. But judging by the stock was $16.50 and went up to $23 on this APE dividend. So never in my life. So normally when a company IPOs a stock, they IPO with stock, it's because they're not getting enough value in their own stock. They feel like if they IPO this piece of their company and they own 20% or 50%, because when they IPO, they're going to sell 30, 40, 50% of it and keep some of it for themselves to get appreciation value. So normally when your stock isn't getting enough value, you IPO and break off a piece. You give other people, or you reward shareholders giving them something of value so that your stock goes up. The whole point of APE is to shaft retail. Adam Aaron went on CNBC yesterday, I think about 9:40 in the morning. Take a look at that interview. He even says he has authorization for almost 5 billion shares of APE. Now, this is another thing that you people don't even understand. If APE does not trade over $1, it's going to have to do either a reverse stock split or that's it. No more stock. That can happen in like 90 days or 120 days. So this thing with APE was a win-win situation, because if the apes don't like it, they already did earnings and the earnings were poor. It goes down. If the apes like it, and APE IPOs, I think the 15th or the 20th, something like that, in a week and a half, and it goes up, you have 5 billion authorized shares to dump to, and you have $5.5 billion in debt. So even if APE is 50 cents and you're unloading 1 billion, 2 billion, 3 billion shares, you're getting cash to help pay off the debt. Now, here's the thing that you guys don't understand. This is an auction. So if they're dumping APE, some of you have to buy APE, right? This is an auction. When there's a buyer, there's a seller. So if everyone is getting APE for free, everyone is getting APE for free, new apes have to want to buy it from you. How much are they going to want to pay if you are all getting the same shares? It was what, like 520 million shares of APE is going out, and it's going to be listed. What is it going to be? 10 cents? 50 cents? Let's say that it's $1 and all of you want to dump it. Then what is the price? A penny? What is it? 5 cents? Because this is IPO, there's no company, no CEO, no sales. It is there for the apes to love it and trade it, and for Adam Aaron to sell millions and billions of shares to get cash. I mean, this is so fun, you can't make it up. This is $1 million idea. If I would have been consulted for $10,000 or $20,000 a week, that's my price. If I like your company, $10,000 a week, I will consult. If you don't get $10,000 of value from my consultation, don't pay me. Just pay for the plane tickets and the hotel, whatever. As long as you get value from my meeting, I know about stocks. All right, I've been doing this my whole life. As long as you get your value, I want my $10,000 or my $20,000. But this APE idea is $1 million, a multi-million-dollar idea. I mean, if he would have ran it by me, I would have told him genius. Because worst case scenario, your earnings were bad. I know he's not going to say that on TV, but earnings were bad. That's why he needs to do this immediately. Come on, man. People, you apes are very funny. I mean, you guys brainwash, spread FUD amongst each other, whatever works, positive reinforcement for bad decisions. Now, if you're trading it, I don't blame you, because it's hot. You see that volume? It's going up. It's hot trading it. But if you are diamond handing it, if you've been holding it for months, and you're hoping for a mother of all short squeezes, MOASS, to 100, or even 50, 60, you need to really do some research. Now, if you're trading it, it is hot. I don't blame you. I don't know why apes keep going into GameStop, AMC, Bed Bath and Revlon's already in bankruptcy. Redbox is going to close, I think they said, towards the end of the third quarter, which is September 30th. CS Chicken Soup Entertainment, CSSE, is buying Redbox for not even 0.09 of 1 share. It's already a done deal. The creditor, because Redbox owes $350 million, does not want money from Redbox. So you guys are trading it, and just like I said, you could trade a stock, even if it goes into bankruptcy. It's going to have a queue at the end until a judge says that's it. The stock can no longer trade. So let's say it's AMC or Bed Bath and Beyond. You could be trading the stock And the judge says, that's it, put a Q on it. The next day, it's got a Q. And usually when you get a Q, the stock drops like 50%. Who knows with this retail? But usually, pre-pandemic, once it gets a Q, it goes down like 50%. Then it could be 1 week to the next week, it just stops trading. All right. I traded Men's Warehouse. It became Taylor Brands. TLRDQ. Luckily, I sold it, not too long after it got a Q. Because after I sold it, like a week later, that's it. It was no longer trading. If it no longer trades, zero. It doesn't matter if you were in the stock at $20. The next week, it gets a Q and it's $10. And then the following week, the judge says it can no longer trade. You get zero. You can't get nothing. The only people that get things are the creditors that AMC owes a lot of money. What do they get? They get the movie theater. They get assets. So it's not like AMC goes out of business and all the movie theaters close. No. The people that own the debt own all the assets. Okay? That's how it works. Your equity is white. When a company goes out of business, your equity is white. The only time it was white with Hertz, but since the consortium that bought Hertz for $6 billion wanted to IPO quickly, so they shafted retail. When that happened, the retail did get something. But normally when it gets Q, retail gets nothing. They got something, they got shafted, but it's not about that. This is about Adam Aron was actually brilliant. He was actually brilliant with this idea. Because like I said, worst case scenario, no one buys this APE. He can sell off. He has 5 billion shares. He gets a little bit of money. Let's say APE is 10 cents. He sells off 5 billion shares. He still gets 500 million for nothing, for just having this idea. If it stays under $1 and it gets delisted, at least you get that $500 million. Let's say it goes down to a penny. I'm not saying it's going down to a penny, but if it goes down to a penny, then it gets $50 million. If it goes to $1, man, genius. He's going to adopt all that and then pay off the debt. Now, here's another kicker that you people don't understand. So, the APE shareholders can vote to get AMC shares. As long as the AMC shareholders are okay with it, they can switch it and get AMC shares. So there's dilution. I keep reading on Reddit that there's no dilution. It's going to be voted for. But think of this. What are the other apes? And that's why I'm saying, how do you rely on apes? You don't know what they're going to do. So I'm an ape. I have AMC long, diamond hands. You give me, let's say I have 1,000 shares of AMC. I've been diamond handing this forever. You're giving me 1,000 shares of APE. I'm not saying it's 1-to-1, but I'm just giving you an example. I have 1,000 AMC. You just gave me 1,000 APE. Later on, you give me a vote on the APE, and you give me a vote on the AMC. I own both. So even if you tell me your 1,000 shares of APE would be 10 shares of AMC, yes or no? I own them both. I see AMC is trading higher. Guess what? I'm going to say yes, yes, yes. Why? Because I own the AMC. I own the APE. I'm diamond handing. I can see that the APE is not going to be worth anything. So if you give me a vote, I do not want the APE shares. Give me the AMC shares. AMC has 520 million shares. APE has 5 billion shares. So what's going to happen? Let's say it's 10-for-1. I don't know what it is. I don't know what it's going to be. But I'm just saying this is what a CEO needs to do. They need to have authorized shares and shaft retail. I hate to tell you retail, but how do you go beyond? I love Beyond Meat. It used to grow sales at 200%. Now it's decreasing sales, massive losses. This stock was like lower than $20. Our Roblox was like $20 on bad earnings. Now it's near $50. How can a company that's been doing so bad and they're losing money doesn't shaft retail? I don't think a lot of CEOs understand this opportunity that the stock market is offering them. We have so many new retail that you could take advantage of. Why can't it just be retail taking advantage of retail? It can also be the companies taking advantage of retail. Obviously, some companies are doing it, like AMC Aaron. So I'm going to say, that's what I'm saying. He understands the stock market. He understands the whole point of going public. He's dumped all his shares, and he's dumping shares to keep the company in business so it can come back. Then when he gets options, he's going to get even more money thanks to retail. So that's my point. You got to take advantage of retail, making stocks that are worthless go up so much. I really don't care if you're all offended. This is the truth. The stock market exists to have a public market so that when a company or a company insider needs cash, they sell into it. If your company is losing money, no way to get money, you might as well not even do business and sell shares and get money. Retail is doing the volume. Retail is making the stock go through the roof. Look at Revlon. Look at Redbox. I mean, it's too bad that Redbox didn't try to sell shares months before that deal. It was like $30. They could have just paid off all that debt. I don't know what I'm saying exactly. So this video, take advantage of retail. When stocks are doing very well and the company is not doing well, you must shop the retail. This is a lot different from last year because even though the companies were not doing well, they were still growing and not losing a lot of money. Take a look at Carvana. Take a look at Beyond last year. They were losing money, but still growing. Now they're not growing and losing money, and the stock is still high. So if the stock is high, sell the stock. Sell the stock. You don't know what to do? Pay me $10,000, $20,000 a week. I'm guaranteeing you that's going to be worth it. Because like I said, if you get nothing from it, don't pay me. I'm going to tweet this. Obviously, I'm not famous, so I'm probably not going to get consultation gigs. But I would do consultation gigs too. So that's video 1.